Hello and welcome to another video on depreciation. And in this particular video, we are going to look at how to make journal entries for depreciation expense using an example from my previous video on depreciation. So if you remember from previous video, we had two most common methods for depreciation. One was a straight line method, commonly known as SLM, and another one was double declining method, commonly known as DDB. The journal entry for depreciation expense remains the same under both methods. I repeat again, the journal entries stays the same, they remain the same under both the methods. There is no difference. So starting with this example, the first thing that we need to do is to calculate depreciation. So in order to calculate depreciation under a straight line method, the formula is cost minus residual value over the life of useful asset. If you read this question or example, the cost in this example is $10,000 with a life of 5 years and a salvage value or residual value of $500. So 10,000 minus 500 over 5, which is $1,900 of depreciation each year. Again, if you remember, depreciation in straight line method remains the same. So it would be $1,900 for 5 years. Now, in the next slide, we are going to look at the journal entries. So these are the journal entries for the 5 years. You can see that the depreciation expense remains the same. There are two components in journal entries, debit and credit. Since depreciation is an expense, expenses are always debit. So debit depreciation expense, and the contra asset account for depreciation is accumulated depreciation, and we credit accumulated depreciation. So debit depreciation expense, credit accumulated depreciation expense. So journal entry format or journal entry for depreciation is always debit depreciation expense and credit accumulated depreciation. It's always debit depreciation expense, credit accumulated depreciation. Moving on to the example of double declining method. In this case, the depreciation entry would stay the same, but the amounts would be different. The depreciation expense would be different. So if you remember, the first thing that we need to do is to calculate the depreciation rate. How do we calculate depreciation rate in double declining method? The formula to calculate depreciation rate is 1 over useful life of asset times 2. In our example, it was 1 over 5 times 2, which came up as 40% or 0.4. That is our depreciation rate. Using the depreciation rate in here and the opening carrying amount, we calculated the depreciation expense already. We just need to make general entries for the depreciation expense. And the whole idea of this video is to show you how to make a depreciation expense entry. If you would like to know how to calculate depreciation expense, please refer to my previous video made on depreciation. So in this slide, you can see clearly the depreciation entries. Again, they stay the same. Debit depreciation expense, and credit accumulated depreciation expense. For each debit entry, there is always going to be a credit entry, and debit is always equals to credit. These rules have to be followed. So if we go back to our slide, the year one depreciation expense under double declining method was $4,000. So if you look at depreciation journal entry for year one, it's depreciation expense $4,000 and credit accumulated depreciation expense $4,000. Further continuing with the same example, if you would like to make the journal entry for year two, you have the depreciation expense calculated for year two as $2,400. In year two, you would again debit the depreciation expense with $2,400 and then credit accumulated depreciation expense with $2,400. Similarly, you would make the entry from year 3 to year 5. Same, you will always debit depreciation expense and credit accumulated depreciation. A quick recap on this brief video on depreciation, which was about how to make journal entries or what is the journal entry for depreciation. it's always debit depreciation expense, debit depreciation expense, and credit accumulated depreciation expense. Thank you for watching this video. If you like this video, please give it a thumbs up and subscribe to my channel. Thank you very much.